And live on YouTube. Just 1 second. Got it.
All right. Well, good afternoon. Thanks for being here, everyone. Today's Tuesday, October 11th, 2022, and I'm calling this meeting of the Tax Expenditure Review Commission to order. Our meeting's being held today remotely in accordance with guidance from the House Speaker and the Senate President. We're being recorded via Zoom and live streamed on YouTube. All meeting documents and the presentations that we'll be looking at today are available on the Tax Expenditure Review Commission website, along with a lot of great background information. Welcome, members, and a special welcome to Assistant Commissioner John Kloxheim, who's joining us in Commissioner Doty's stead as he's moved on to a new opportunity, and we wish him well and thank him so much for his service, and welcome to the commission, Assistant Commissioner Kloxheim. Ms. Ho, will you please take the roll?
Members, please unmute yourself for the roll. Representative Gomez.
Gomez, present.
Gomez, present. Senator Rest.
Here.
Senator Rest, present. Senator Weber. Representative Davids.
David's present.
David's present. Representative Schultz. Senator Dietzig.
Present.
Representative Hertas. Assistant Commissioner Kloxheim.
Present.
Assistant Commissioner Kloxheim present. Senator Bach. Oh, here comes Senator Weber. Just joining now. Okay, so Senator Weber.
Hi.
Thank you. Senator Weber present. Senator Nelson. Representative Marquardt. And just double checking for Senator Bach is expected, but not here yet. The others had been excused. All right, so Chair Gomez, we do have a quorum.
Great, thanks so much, Ms. Ho. So a quorum being present, we're going to review and adopt the minutes from our August 11th meeting. Can I have a motion to adopt the minutes from August 11th, 2022?
So moved.
Thank you, Senator Dietzig moves the minutes. If we could just unmute for a moment. If you're a voting member, all those in favor, please say aye.
Aye.
Any opposed, please say no. The motion prevails and the minutes from August 11th, 2022 are adopted. So we have one kind of big agenda item today, which is consideration of the proposed tax expenditure objectives. This is one of the kind of minimum requirements for each of these expenditures that's outlined in statute, is to establish their purpose. So Ms. Schradel, the LBO's Deputy Director, is going to introduce the work that the LBO has prepared for consideration by the Tax Expenditure Review Commission, followed by the team of LBO analysts who will each present information on the 11 tax expenditures for consideration by the Commission today. Like I said before, those are available on the Tax Expenditure Review Commission's website. And we're going to move into this presentation. Ms. Schradel, is it okay if members ask questions as they come up during your presentation?
Madam Chair and members, the LBO is happy to take questions during the presentation.
The analyst will also pause between each of the tax expenditures presented. The LBO can respond to questions, capture any suggested changes to proposed tax expenditure objectives as directed by the Commission. In cases where there are questions that are related to information or data that is provided largely by the Department of Revenue, we will ask the chair to defer to the Department of Revenue for their response. Thank you.
Great. Thanks so much, Ms. Schradel, and we're happy to have some experts from the Department of Revenue and each of our nonpartisan staffs here to pinch hit if necessary, if we get into their areas of expertise. So members, please feel free to use the raise hand function at any time during the presentation, and I'll watch to recognize you. Ms. Schradel, if you could introduce yourself for the record and then go ahead with your presentation.
Thank you, Madam Chair. Madam Chair, members, for the record, my name is Christy Schradel, and I'm the Deputy Director of the Legislative Budget Office. The LBO is tasked with providing professional and technical assistance to the Tax Expenditure Review Commission as defined in Minnesota Statutes Chapter 3.8855. Since April's first Tax Expenditure Review Commission meeting, over the summer, the Commission has heard presentations on foundational tax expenditure background material at meetings in July and August. I'm going to pause for a moment and ask if the slides are teed up for you to review. All right, thank you, Mr. Whitaker. So today we'll do a brief recap of statutory requirements. We'll begin the discussion of the 11 proposed tax expenditure objectives for the Commission to consider, as well as finish with some key dates so everyone is clear on the Commission deliverables over the next few months. As we pivot to the work prepared by the LBO, represented in the material that you have for today's meeting, including this slide deck and a more detailed document that includes an introduction, methodology, and a compilation of tax expenditure research conducted by the LBO. This begins the initial review of tax expenditures and carrying out the duties of the Commission required by Subdivision 4 duties. From a timing perspective, the initial review of the state's tax expenditures will occur the first 3 years after the Commission was established. The tax expenditure evaluation phase will follow this initial review phase. That phase will require further consideration in the form of more in-depth research and analysis on metrics for evaluating the effectiveness of tax expenditures with direction and input by the Commission. In consideration of the last bullet on your screen, the documentation provided to you today does include a section describing potential metrics and performance measures for each of the tax expenditures we'll review. However, these should be considered preliminary at this point in the process. Today's initial review of proposed tax expenditures includes 11 different tax expenditures as displayed on the slide. We've selected these 11 tax expenditure objectives for your consideration across 3 different tax types with a range of estimated expenditures. The 11 tax expenditures do not currently have purpose statements in session law or statute. There are currently 316 tax expenditures across 15 tax type chapters as presented in the published Tax Expenditure Budget Report by the Department of Revenue. Of the 316 tax expenditures in the current report, 104 currently have proposed statements in session law or statute, of which 81 exist to comply with federal tax conformity. I should mention that both the Research and Development Credit and the Housing Contribution Credit, although they are discussed or will be discussed in the corporate tax section, you will see in the detailed material we have added the corresponding tax expenditure budget reference number associated with the same tax expenditure within another tax type. In these cases, there's an opportunity to utilize the same proposed tax expenditure objective across multiple tax types. The material we have provided for you today has been reviewed and edited based on input in partnership with the Department of Revenue Tax Research Team. We have also incorporated input from reviews done by our nonpartisan colleagues from House Research and Fiscal, as well as Senate Council Research and Fiscal. As stated in the introduction material of the larger detailed document, some of the material provided to you comes directly from the Tax Expenditure Budget Report published in February of 2022. The information used for portions of the tax expenditure facts found at the top of the detailed documents and the fiscal impact by year as well as expenditure description are largely taken either from the published February 1st report of the tax expenditure budget or more detailed data that has more recently been provided on claims and fiscal impact by the Department of Revenue. As I mentioned earlier, any detailed questions regarding this information or any specific questions related to the administration of the tax expenditure, we would ask that the LBO defer to the Department of Revenue. The robust research methodology that has been conducted by the LBO reflects the process and steps that were presented to you by the LBO lead budget analyst, Mr. Whitaker, on at the August 11th Tax Expenditure Review Commission meeting. This research includes an in-depth review of legislative record, review of hearings, previous engrossments, and similar bill language, a review of comparable legislation in other states, as well as a review of academic research or industry consensus. As we move through each of the proposed tax expenditures, Mr. Whitaker will run the slides and transition us between each of the tax expenditure discussions. He will also conclude the presentation with a summary of a few key dates. Each of the LBO analysts will walk through a consistent set of information for each tax expenditure, including some tax expenditure facts, the tax expenditure description, additional background information, as well as sources that were used to provide information to inform the proposed tax expenditure before you. Now I will turn it over to Ms. Wirtz, one of our LBO analysts, to introduce herself and review the first tax expenditure for your consideration, the working family credit. Thank you.
Madam Chair and members, for the record, my name is Susan Watts. I'm going to discuss the tax expenditure working family credit. It is referenced by the number 1.90 in the Department of Revenue Tax Expenditure Budget Report, Minnesota Statute 290.071. Minnesota Working Family Credit was enacted in 1991. It is modeled after federal earned income tax credit with some adjustment. It offers a refundable credit to qualified taxpayer with income below certain levels. The refundable amount depends on income, number of dependent children, and the filing status. There's about 400,000 recipients of this credit in 2020s. The physical impact on state general fund was outflow of $227 million. That is about 560 per recipients. As you can see on the slide, the proposed tax expenditure objective is to encourage work and help family raise their income above the poverty guidelines levels. This proposed state objective is adapted from a review of selected tax expenditure by Minnesota House Research Department in 2013. It is also reconciled on federal levels and collaborate with the sentiments from numerous academic researchers and evaluation by other states. Madam Chair and members, that is my brief overview of working family credit, and the proposed objective is for Commission's considerations. Thank you very much, and I'd be happy to answer any questions.
All right, I see that Senator Rest has a question. Just before that, I wanted to note that on the Tax Expenditure Review Commission website, there's a full, it's like, I think the document's maybe 30 or so pages that kind of expands on this and has a lot more information. So folks should definitely review those as we're moving forward here if they haven't had a chance to already. Senator Rest.
Thank you, Madam Chair. I'm really interested as we go through these, and I have read through these, I haven't read the underlying documents, that we paid very close attention to the acceptance of the sources. As you know, in 2013, the Senate did not deal with the work that House Research had done. And also, I'm hoping this is in your background materials, that you give the history of the working family credit, when it was a conformity item, and then when it became decoupled, and then when there's been changes made in it over the years, including just a couple of years ago, that we might have done it even in 2022 if we could have passed a tax bill, that the evaluation of a tax expenditure does change over time because of those features of it. And so I'm hoping that there'll be a lot of flexibility in that evaluation, and and that the Department of Revenue that we depend upon for revenue estimates has obviously stayed on top of this issue over the years, but that the LBO very conscientiously, and I think they are doing this, respects the work of those estimates that the DOR has done. Just because House Research has done it, or just because Senate Council has done it, does not mean that the legislature has adopted it. So thank you very much for allowing me to comment. And my comments are probably going to be repeated, so I will not do it for every single one of these items that you've selected to present today. Thank you very much.
Thank you, Senator Rest. Yeah, I think that's a really good point about sort of especially with some of these that are like, were originally conformity items, and then we've diverted from them over the years, that it's a good point that, sometimes maybe what was true in 1991 won't be true in 2022. So thank you so much. I don't know if Ms. Wirtz, if you have any comment or response on this specific one, to that sort of that historical aspect that Senator Rest pointed us toward helpfully.
Again, I had Minnesota did a really great report on the history background on federal working family, the earned income credit, and also under the Minnesota working family credit. That report is published in 2017, approximately, and they give a very good detail on the history, how come from federal conformity into then adapt for Minnesota specific conditions. And that there are certainly a lot, each state have its own characters, and the Minnesotas have adapted very well to suit its own conditions. Certainly we will reflect those changes in our detailed report. And definitely the evaluation will be changed to suit current conditions. And I, based on a lot of report, one very key evaluation is incident report. That is especially come from Department of Revenue. So a lot LBO's research and the evaluation is based on that. So Department of Revenue certainly have a big input on all these evaluations. Thank you very much.
Thank you. Yeah, I think we can probably move on to the next one, unless there's any further comment or question, which I don't see, so we're good.
Okay. So, Madam Chair and the members, this round of overview is on beginning farmer management credit, reference number 1.103, Minnesota statutes 2.290.6, subdivision 37 and the 41B.0391. This statute was enacted in 2017 and it will be expired in 2020. This unrefundable tax credit offer tuition reimbursement for beginning farmer who participate in a financial management programs. About 400 taxpayers received this credit in 2020, which resulted in an outflow of near $500,000 on state general fund. As you can see on the slides, the proposed tax objective is to incentivize beginning farmer to participate in financial management program approved by the Rural Finance Authority to improve the farming operation success rate in state of Minnesota. There's no explicit statement was found in legislative record. This proposed objective is based on academic research on beginning farmers. Research had established a positive correlation between the financial management scale and successful beginning farmers. That this relation is considered in draft this proposed objective. Madam Chair and members, here conclude my overview on beginning farmers management credit. The proposed objective is for Commission consideration. Thank you very much, and I'd be happy to answer any questions.
Not seeing any. I think we can keep moving.
Okay. So, Madam Chair and the members, my third topic is on beginning farmers incentive credit. Reference number 1.104, Minnesota statutes 290.6, same subdivisions. The statutes again was enacted in 2017 and will be sunset in 2023. Minnesota grant a non-refundable tax credit to asset owner for lease or sale of certain agricultural asset to qualified beginning farmers. 620 taxpayers received this credit in 2020. The physical impact on state general fund is about $2.5 million. As you can see on the slide, the proposed tax objective is lower barrier of entrance for beginning farmers and make them more competitive. This proposed objective is based on testimony of House File 608 by Bill Arthurs before 26th meeting of House Tax Committee during 2017-2018 sessions. A similar language can be found in Nebraska legislative bills and the evaluation by the state of Iowa. Madam Chair and the members, that's my presentation on beginning farmers incentive credit. The proposed objective is for Commission's consideration. Thank you very much, and I'm happy to answer any questions.
Okay, I'm not seeing any questions right now. There'll be more chance for feedback later, of course, but let's keep moving.
Madam Chair and members, my last topic on the research development credit, reference number 2.27 for corporate franchise tax and 1.86 for individual income tax. And the Minnesota Statutes 290.068. Federal government and the state of Minnesota's enact R&D tax credit in 1981. Minnesota structured in line with federal government, but with few modifications. The state of Minnesota allow business conducting research and development within the state to claim certain non-refundable credit. Corporation can do so against corporation franchise tax, and pass-through entities such as S Corp, partnership, and the LLC can be against their individual income tax. The qualified cost, including wages, supplies, and other variable costs, certain contribution to nonprofit organization can be included. In 2019, the fiscal impact on state general fund was about $56 million in total. As you can see on the slide, the proposed object fund is to create or retain jobs, increase research activities, and attract or retain business in state of Minnesota. This proposed objective is based on recommendation by the Office of Legislative Auditor in its 2017 report of Minnesota Research Tax Credit Evaluation. This is also reconciled on federal levels. Academic research and the evaluation by other states offers additional assurance. Madam Chair and members, this is a brief overview of tax and development credit, and the proposed objective is for Commission's consideration. Thank you very much. I'd be happy to answer any questions.
Thank you so much, Ms. Wertz. Senator Rest, looks like you have a question or a comment.
Yes, this is a comment. The review of the research and development credit by the OLA was done because we put into statute at the recommendation of the Pew Foundation a burden on the OLA to indeed do a study of various tax expenditures, quite frankly. And the OLA reported to us following this one that this was a changing target over the years and very difficult to evaluate. And they asked to be excused from that duty in future years. It had been my legislation. I agreed with them, and we repealed that part of the statute just to cast a light on the what the recommendations of the OLA actually meant at the time. Thank you very much.
Thank you so much for that, Senator Rest. I think it was like maybe my first week in tax committee that we got the presentation of that report, and it stood out to me, right, that you know, they were like, well, kind of hard to evaluate when there isn't any outlined intent. So I'm glad we're moving more toward that. Anything else, Senator Rest? Your hand's still up.
Yes, actually, it was because the credit itself is a political activity of the tax committee that changes from year to year. The notion that there would be the information available to the OLA to do that is when they asked to be excused from it. The reviews that are done by the OLA usually are on policies that have been developed over time and not change just year to year, because we may or may not have money in the budget to do it. So Representative Gomez, I object to your characterization of their work.
Fair enough. Thank you for that background. Let's keep moving.
Madam Chair and members, for the record, my name is Laura Seco, and today I'm going to discuss the tax expenditure titled Employer Transit Pass Credit referenced in Minnesota Statute Section 290.06 Subdivision 28. This tax credit is also referenced as number 2.28 in the Department of Revenue's Tax Expenditure Budget Report and is shown in page 12 of your packet. This tax expenditure is generally described as a non-refundable credit allowed against the corporate franchise tax equal to 30% of the expense incurred by the employer to provide transit passes to their employees. The transit pass must be for use in Minnesota. If the employer purchases the transit passes from the transit system and resells them to their employees, the expenses used for the credit is the difference between the amount the employer paid for the passes and the amount charged to their employees. This tax expenditure was enacted in 2000. Most recently available data shows a fiscal impact of 1.172 million in tax year 2019. However, the number of claims is not available. And as you can reference on the slide, the proposed tax expenditure objective reads as follows. The objective of the Employer Transit Pass Credit is to incentivize Minnesota employers to subsidize transit passes for their employees to encourage the use of public transit. This objective is based on author testimony for standalone companion bills pertaining to the Employer Transit Pass Credit for House File 723 and Senate File 813 from the 1999 session. So Madam Chair and members, that's a brief overview of the Employer Transit Pass Credit and the proposed tax expenditure objective for the Commission's consideration, and I'm happy to answer any questions.
I'm not seeing any, Ms. Seco, so we can probably go on to your next one.
Good afternoon, Chair Gomez and members. For the record, my name is Joel Enders. Today I will be speaking on the housing contribution credit found on page 14 of your review packet. The credit can be claimed against corporate franchise, individual income, or insurance premium taxes, but functions the same regardless of the tax type. So for this review, staff has identified one tax expenditure objective that covers all three tax types. For reference, the housing contribution credit is listed as expenditures 1.97, 2.32, and 12.09 in the tax expenditure budget. This credit allows an individual or business that contributes to a designated account to reduce their income, franchise, or insurance premium tax liability by up to 85% of the contribution amount. The account is administered by the Minnesota Housing Finance Agency and will be used for grants and loans to low and moderate income housing developments. The credit was enacted in 2021 and is effective for tax years 2023 through 2028. The aggregate amount of tax credits allowed to all eligible contributors is limited by statute to $9.9 million annually. The proposed tax expenditure objective is to increase the development and availability of affordable housing to persons and families of low and moderate incomes in Minnesota. This objective was taken from companion bills Senate File 1866 and House File 1971, which were introduced in the 2021 session. The companion bills are functionally identical to what was ultimately enacted in laws 2021, but contain a statement of intent which was not included in enacted language. Madam Chair and members, that's a brief overview of the housing contribution credit and the objective statement identified for your consideration. I'm happy to answer any questions at this time.
Thank you, Mr. Enders. I'm not seeing any, so I think we can keep moving.
Hello again, Madam Chair and members. Again, for the record, my name is Laura Seco. And next, I'm going to discuss the tax expenditure titled Telecommunications Equipment. This is referenced in Minnesota statute section 297A.68 subdivision 3A. And this tax expenditure is also referenced as number 4.21 in the Department of Revenue's tax expenditure budget report and is shown on page 17 of your packet. And this tax expenditure is generally described as an exemption from the sales and use tax allowed for providers of telecommunications, cable television, and direct satellite services for the equipment they purchase or lease for the use of providing telecommunication services that are ultimately sold at retail. This expenditure was originally enacted in 2001 and repealed in 2013 and then reinstated in 2014. And then in 2017, the exemption was expanded to include fiber and conduit. Most recent actuals for fiscal impact and the number of claims is not available. And then as you can reference on the slide, the proposed tax expenditure objective for this tax expenditure reads as follows. The objective of the telecommunications equipment exemption is to reduce potential tax pyramiding and to promote transparency in the tax system by exempting telecommunications equipment that is used to provide taxable telecommunication services. This proposed objective for the general exemption is based on author testimony from the House and Senate Tax Committee hearings for companion bills, House File 2023 and Senate File 1819, which were ultimately included in the 2001 Tax Omnibus Bill, House File 1. Furthermore, the objective of the 2017 amendment to the telecommunications equipment exemption that expanded the definition of telecommunications or pay television machinery and equipment to include fiber and conduit is to increase the deployment and accessibility of broadband internet service in Minnesota. This proposed objective for the 2017 amendment is based on author testimony from the House and Senate Tax Committee hearings for companion bills, Senate File 955 and House File 1250, which were ultimately included in the 2017 Omnibus Tax Bill, House File 1. So Madam Chair and members, that's a brief overview of the telecommunications equipment tax expenditure and the proposed tax expenditure objective for the Commission's consideration, and I'm happy to answer any questions.
Thank you, Ms. Seco. I don't know if it's for you or somebody at the department, but I noticed like for these next number of expenditures, like if you look in the little box on the top of the source document, that it on the right there will be a little graph that was like projected fiscal impact, but then for a number of them we don't have data. I wonder just like if there's a reason for that for some of these that, you know, I know some of them it says, oh, that like the impact can't really be directly measured, but then there are other ones like this one, for example, where I'm just curious about why we don't have the information about how much it's costing each year.
Yeah, as far as the numbers on the graph, that information was taken from the Department of Revenue's tax expenditure budget report, and then the most recent available data was also provided to us from the Department of Revenue.
So if it says the data is not available, does that just mean it's not available for this year? And will it become available at some point, or like for this and kind of the other ones that don't have it?
Yeah, I would defer probably to the Department of Revenue on that question.
Great. I don't know if Mr. Willett or Ms. Bears or somebody else wants to chime in. Hey, thank you, Mr. Willett. Can you just introduce yourself for the record,
yes,
please?
Madam Chair, members of the Commission, my name is Eric Willett, and I'm the Director of Tax Research at the Minnesota Department of Revenue. Yeah, you'll notice that we are able to provide more precise counts for some tax expenditures than for others. And that has to do with the way the taxes are reported. We've now moved into the sales tax realm. And for most sales tax expenditures is an upfront expenditure that the purchaser gets at the time they're making the purchase. So there's no documentation specifically of that exemption being granted. It's so for those tax expenditures, we have to estimate the total cost of those expenditures based on federal consumption data that we get through our consumption tax model. So we are a little bit more in the estimation side of things with the sales tax expenditures than we are with a lot of the income and corporate tax expenditures where we have records for each individual taxpayer.
Great. Thanks so much for clarifying that. Sorry if I was the only one who was confused about that difference between the, obviously you can really closely track the individual income tax impacts versus sales. So thanks. I'm not seeing any other questions, so we can move on to our next one.
Madam Chair, members, for the record, my name is Carlos Whitaker. I'm going to discuss today the tax expenditure titled Solar Energy Systems, found in Minnesota Statutes 297A.67, subdivision 27, also referenced by number 4.27 in the Department of Revenue's tax expenditure budget report. And in our review packet, it's on page 20. The tax expenditure is generally described as a sales tax exemption on solar energy system devices meant to collect solar energy, convert it, store it, and use it for a variety of purposes that may include heating, cooling, or other energy producing processes, or to produce generated power. This expenditure was enacted in 2005, the same year that a previous exemption on photovoltaic devices was expired. Most recent estimates for fiscal impact and number of claims are not available for Minnesota. And as you can reference on the slide, the proposed tax expenditure objective for this tax expenditure reads as follows. The objective of the solar energy system's general sales and use tax exemption is to incentivize and promote the implementation and utilization of solar energy systems in the state of Minnesota to achieve a greater percentage of renewable energy contributions to the state's electricity fuel generation mix. So Madam Chair, members, in drafting this proposed objective, several factors that inform that drafting. One of those is that an explicit statement of intent was not identified in the legislative record. And in developing the objective, other Minnesota laws were referenced specifically pertaining to solar energy, such as Minnesota statutes 216B.169.1691, which establish renewable energy standards for the state, with particular mention to solar energy. Also, similar tax incentives and statements of intent that were adopted across other states like Arizona, Colorado, and Washington have been referenced. And lastly, other reports on Minnesota's own solar capacity and electricity fuel generation mix informed the objective as well. So Madam Chair and members, that's a quick overview of the solar energy systems tax expenditure and its proposed objective.
Thank you so much, Mr. Whitaker. Not seeing any questions? So I think we can keep going.
Chair Gomez and members, for the record, my name is Joel Enders. Today we'll be speaking on the farm machinery sales and use tax exemption, which is found on page 22 of your review packet. This expenditure exempts farm machinery that is used directly in the production of agricultural products, such as grain dryers, feeding systems, tractors, and balers. The exemption is claimed at the time of purchase, and it was first enacted in 1981. The proposed tax expenditure objective is to reduce potential tax pyramiding and promote transparency in the tax system by exempting machinery and equipment used directly in the agricultural production of tangible personal property intended to be ultimately sold at retail. This objective was informed by a review of statute sections 297A.69 and 297A.61, particularly statute language that defines the term farm machinery, which limits qualifying items to those used directly and principally in agricultural production. Note that statute originating bills, committee hearings, and other legislative documents do not directly state an objective for this exemption. Madam Chair and members, that's a brief overview of the farm machinery exemption and the tax expenditure objective identified for your consideration. I'm happy to answer any questions at this time.
Thanks, Mr. Enders. I don't see any. So we can keep going.
Madam Chair and members, I have this one too. So with this exemption, veterans with certain disabilities can apply for federal adapted housing grants to help cover the cost of constructing or modifying a home to meet their needs. Some examples include installing ramps, accessible bathroom fixtures, or automatic door openers. The Minnesota sales tax exemption allows federal grant recipients to claim a sales tax refund for materials that are used in the construction or remodeling process. This expenditure was first enacted in 1971 and has not been modified substantially since then. Note that adapted housing grants are considered a veteran's benefit that is exempt from federal and state income tax. The proposed tax expenditure objective is to provide specific sales and use tax relief to disabled veterans who have been awarded a federal grant for the construction or remodeling of their homes, ensuring that disabled veterans receive the full financial benefit of the federal program. This objective was informed by a similar expenditure offered by Washington State that includes legislative findings and a statement of intent that is written into statute. Like Washington, the Minnesota exemption helps disabled veterans apply as much of the federal grant amount as possible towards their intended project. Like the previous exemption, I'd like to note that Minnesota statute, originating bills, and other legislative documents do not include an expenditure objective or statement of intent. Madam Chair and members, that's a brief overview of the disabled veterans exemption and the tax expenditure objective identified for your consideration. I'm happy to answer any questions at this time.
Great. Thank you, Mr. Enders. Senator Rest, it looks like, has a question or a comment about this one.
Thank you very much. I'm just curious about the date of 1971 and what the status of the sales tax statutes in Minnesota was in that year, as opposed to a real overhaul of that a number of years later. And I hope there will be an explanation of that in your underlying documents. Thank you very much.
Thank you, Senator Rest. I have a feeling that might go beyond Mr. Enders' sort of knowledge of our tax code. So I don't know but if you or if we want to ask if somebody else in research or at the department has any comments on that.
Well, Madam Chair, if he is making a reference to a year in which this program was started with regard to our sales tax statutes at the time, I expect him to be able to comment on it. Thank you very much.
Thank you, Senator. Noted. Mr. Enders?
Madam Chair and Senator, I don't have the detailed information off the top of my head at this time, but I can certainly follow up with you at a later time.
All right,
I would request that you do that to all members of the commission, not just myself. Thank you very much.
All right. Thank you, Senator Rest. All right, I'm not seeing anybody else jumping in to answer this, so we'll have to follow up. I'm not seeing any other questions, so I think we're maybe on our last one of these, I believe.
Yep, Madam Chair, members, again, for the record, my name is Carlos Whitaker. The last tax expenditure that we'll discuss today is the construction materials for certain city projects under Minnesota statutes 297A.71 subdivision 44, and also referenced in 297A.9905. In the tax expenditure budget report, it's referenced under number 4.73. And in the packets that we provided to you, it's on page 26. Madam Chair, members, the tax expenditure is a sales tax exemption on materials, supplies, and equipment incorporated into the construction or improvement of a capital project, funded partially or wholly by a city of the first class. That's defined in statutes. Additionally, project funding must be drawn from excess revenues generated by local tax on retail sales. There are a few other specifics as to what kind of capital projects qualify for this tax exemption. Generally, the project must involve the construction or renovation of a sports facility or convention center or convention or city center. This tax expenditure was enacted in 2012. A direct measure of the fiscal impact and number of claims is not available at this time. But just to give members an idea of how this has been implemented in the past, in 2017, the statute was amended to include a renovation of an ice arena in the city of Plymouth and the construction of Allianz Field in St. Paul. As referenced on the slide, the proposed objective for this tax expenditure is the objective of the sales tax exemption for construction materials for certain city projects is to provide an indirect means of assistance to local governments for capital projects funded wholly or partly by excess local tax revenues imposed under special law. A few considerations that inform that objective statement. One is an explicit statement of intent for the tax expenditure is not provided in the legislative record. Multiple times references are made to past practices of implementing a sales tax exemption on similar capital projects like the Twin Stadium. A description of an amendment of the amendment of 2017 does frame the mechanics of the sales tax exemption as a means to help fund specific city projects. And Madam Chair and members, we also looked at comparable policy in other states and the District of Columbia. And the proposed objective before the commission today is modeled after Pennsylvania's language for a similar tax exemption on construction materials and equipment. Madam Chair, members, we also considered limitations of measurement as other states identified significant challenges in our ability to measure intended externalities. And so we took that into account when developing a proposed objective for the commission. So, Madam Chair, members, that's a brief overview of the sales tax exemption for construction materials for certain city projects and the proposed tax expenditure objective. And I'm happy to answer any questions.
All right. I'm not seeing any final questions here. I know that, yeah, Mr. Whitaker is going to then go on to these key dates. I just wanted to really just extend my gratitude to the staff who've been working on this. I think the work product's really exceptional. There's a lot to digest, but we do appreciate, you know, how much went into to this document and getting us off kind of on the right foot as we move forward in figuring out how to do these evaluations. Senator Weber.
Thank you, Madam Chair. I guess I have a basic question here as it relates to the reason for going through and determining objectives, just simply another word for purpose, which quite frankly, a lot of times in the Senate, we try to avoid that within our legislation. Many times in the information that's been presented, we see the statement explicit tax objective was not identified in the legislative record. If it was not considered necessary to do so at the time that that particular item was adopted by the legislature, I guess I look at it as who are we to come back and say, okay, this should be the official objective of that legislation. And I'm wondering, why was this included in the tax expenditure bill in the first place?
Sure. Thank you, Senator Weber. So, you know, to your point, it is included in the bill. It's in subdivision 5, A2. Identify the purpose of the tax expenditure if none was identified in the enacting legislation in accordance with section 3.192. And, you know, the reason that we need to identify the purpose of a tax expenditure if we're endeavoring to determine if it is effective is because, you know, we have to agree what it's supposed to do if we're going to decide whether it's doing a good job of it or not. I think, you know, obviously we've had a lot of discussion in this public forum as well as like in private, and I understand very well the Senate's sort of orientation toward adding purpose statements to statute. That is not what this does. This points us toward developing a shared understanding of what the intent or, kind of intended outcome of these tax expenditures is, so that we can determine if they're doing a good job of it or not. And if we don't start with that shared understanding of what is this thing supposed to do, what is this money supposed to do, then it's going to be really hard for us to develop, performance measures and metrics so that we can do that, conduct that evaluation, which is the task of this commission, as you know. So, yeah, I mean, again, this isn't adding purpose statements to statute. This is establishing a shared understanding of what these things are supposed to do so that we can do our work as a commission. I don't know if you had anything else, any other comments or questions you wanted to add, Senator Weber, before we move on to the key dates.
I think, Madam Chair, it might be all right to have this discussion. I guess I would be reluctant to vote as a committee to say, yes, this is it, no, that's not. If we wish to establish criteria as to how we evaluate things within our framework, fine. But I'm not quite sure that I would go along with us officially adopting those type of things. That's at least my initial reaction to it. So,
okay, I appreciate that feedback. So we're not going to be taking a vote today. We are required by statute to submit a report on the 15th of December of each year, and so that's sort of what we're moving toward. Like I said, I mean, the components of review are laid out really clearly in statute. And so if there is an alternative way that you would like to, quote, identify the purpose of the tax expenditure if none was identified in the enacting legislation, I'm very open to that. But, this is sort of the direction that we've been moving in. And if there's a recommendation for an alternative way to do that other than this, I'm happy to have that conversation. But it kind of has to happen with, expeditiously, because we do have this report to submit coming up pretty quickly here. I'm not seeing any other comments or questions at this time. So maybe we can go ahead with the discussion of the key dates. Mr. Whitaker, if you want to take it away.
Yeah, Madam Chair, members, just briefly, this slide that's on your screen provides an overview of the Commission's progress dating back to the Commission's first meeting in April of this year. The last two bullet points recognize deadlines that the Commission has by statutes. As Madam Chair, as you just mentioned, any material that is to be included in the Commission's annual report must be heard in public hearing by December 1st, and the report itself must be published by December 15th. So, Madam Chair, members, we are happy to take direction as we shift our focus to satisfy those statutory requirements.
Senator Rest.
So the December 15th date, we go back and forth on reports, whether they should be done before session starts or after, or in the last, or by the first of the year, or whatever. That statutory date to publish the first report, will that require a vote by the Turk?
I think on that, I would have to ask if either Senate Council or nonpartisan House research staff have a comment or feedback on that. I've never chaired a commission before or been on a commission, actually, so I wouldn't know. But I don't know if anybody else has anything they'd like to jump in with. And I do just want to note we're actually at our closing time, so we had this meeting scheduled for an hour. I think we can go a couple minutes over, but we're going to have to finish up pretty quickly here. I'm not seeing anybody who wants to step in to answer that question. So,
Madam Chair, This is Nora Pollock with
Oh,
Senate Counsel.
Yeah, Ms. Pollock, thanks so much. Yeah, please, what do you think?
Sure. Mr. Williams might have some thoughts as well, but I think we discussed this a little bit a few months ago. You know, I think it's probably up to the commission as to how they want to, what procedures they would like to adopt to put forward reports, whether adopting the report or so forth, that's required to be submitted to the taxes committees. It's really up to the commission itself as to how they want to make these submissions and adopt your own procedures and policies.
Thanks, Ms. Pollock, for that. Mr. Williams, did you have anything additional to add?
Chair Gomez and members, I echo what Ms. Pollock mentioned about this. I don't think that statute speaks one way or another to the process for adopting and submitting a report. I would note that the report and statute is submitted by the commission itself. So I think it would be a reasonable interpretation of the statute that would probably require a vote of the commission to submit a report to the commission. It's not a report prepared independently by the staff or of the LBO or particular members, I guess.
Thank you very much, Mr. Williams. Is there any further discussion or comment on that point or anything else before we wrap up today? I'm not seeing any. So I just want to thank everybody again for being here, especially, thanks to Ms. Seco, Mr. Enders, Mr. Wedeka, Ms. Wertz, and Ms. Schradel for all your work developing this for us to review. And thanks to all the members for joining us today. This discussion is to be continued. Looking forward to figuring out a way forward and publishing this initial report and delivering it to the legislature on time. And with that, this meeting of the Tax Expenditure Review Commission is adjourned. Have a great day, everyone.